Happy Monday, y'all. I'm here to talk today about what affects mortgage rates. Now, mortgage rates seem to be on everybody's mind lately, with a lot of people in a 1.5% to 2.5% fixed rate mortgage coming up for renewal within the next year or two. So let's dive in. Government policy to protect the economy during the pandemic gave us really low mortgage rates for both fixed and variable rate mortgages alike. Now, we're kind of out of the COVID period. We're moving towards recovery. People are talking about recession and the R word and inflation, but through that period of time, we've watched fixed rates move quite a bit upwards. Now we're in the mid fives, low six range, depending on the lender that you have. Now, the question that a lot of people I ask, and some people are surprised to hear, is that fixed rate and variable rate mortgages aren't influenced by the same factors. So let's dig in, take a look at the mechanics of both of them. First off, we're going to take a look at variable rates and see how they're set. Now, 8 times a year, the chartered banks set the prime lending rate, and that's the rate that they offer their best customers. And they base these decisions on the Bank of Canada's overnight rate, because that's the rate that influences their own borrowing. Now, there's approximately 8 times a year the Bank of Canada makes these rate announcements. And when they do, variable rates and lines of credit tend to move in conjunction with that prime lending rate. Now, most lenders currently offer variable rates at around prime minus a certain percentage, so maybe prime minus a half, prime minus 0.6. And in the recent announcement by the Bank of Canada last week, they didn't increase their overnight rate. So this is great news, right? Because right now, if you've got a variable rate mortgage or a line of credit, you didn't go up. Now, some economists are starting to predict and talk, instead of will they lower rates, it's not will, it's actually when. So next year, a lot of the leading ones are starting to think we're going to see them start to come down. So let's dig into fixed rates. Fixed rates are a little bit different. So banks predominantly use the Government of Canada bonds to raise money for fixed rate mortgages. Now, in the bond market, interest rates can fluctuate more often since they're subject to the changing moods of bond traders and investors alike as they try to figure out how fast that economy is going to grow and where inflation is headed. That's why you tend to watch the bond market for clues on where the fixed rates will go next. Now, recently, the yield for the 5-year government bonds have started to come down. And what this has done now is trickled in and caused fixed rate mortgages to follow suit. So we're starting to see across the board fixed rates on 3-year and even 5-year mortgages decline. So this is great news too if you've got a mortgage coming up for renewal. Now, the period from 2008 to 2022, when we look back over history, all the way back to 1981, it was probably the lowest time since then. It actually was for both fixed and variable rate mortgages. Now, you may be wondering, why are there so many different mortgage rates that I've got to think about when I'm either getting a new home or starting to renew? Now, they're not the only factors. There's probably 8 or 10 of them that we need to look at, a bunch of them being rate premiums that tend to happen in certain situations, like rental properties or longer amortizations. And there's also different rates if you're an insured or insurable or uninsured mortgage. Now, what you tend to find with some rock bottom online rates is that you'll get prepayment penalties, restrictions on what you can prepay, and high fees if you tend to break that mortgage early. Now, did you know that 2 out of 3 Canadians will tend to break a 5-year fixed mortgage within 36 months? So that's a big thing to keep in mind as you start to look into what kind of mortgage solution is right for you. So get in touch. I'm here for you, Daryl Kramer from Daryl Kramer Mortgages. Professional advice is always the best. So the good news is that we're here to help you figure out what the best solution is for your purchase, renewal, or refinance. That's all for today. Talk to you more later. Bye.